Hey everybody, Smart Silver Stacker here. Hope you're doing well. The stage is being set for what could be the next major upleg in the silver bull market. After years of consolidation, silver has finally broken out from a massive multi-decade cup and handle formation, a technical pattern that has been developing for nearly half a century. On Friday, we saw an important retest of that breakout level, and silver managed to close above it, confirming the breakout. In my view, that kind of price action doesn't mark the end of a move. It usually marks the beginning of something bigger. On the long-term chart, the breakout from this enormous cup and handle pattern is clear. Silver briefly dipped during Friday's session, but closed well above the breakout line, the same level that capped prices for over a decade. That line has now flipped from resistance into support. This is classic technical behavior, a breakout, a retest, and a validation of the move. Zooming into the daily chart, we see the same story. After several weeks of strong momentum, silver pulled back sharply, but found buyers right where it needed to, around the old resistance level. Silver's relative strength index, or RSI, cooled off below 70, exactly what we want to see before the next leg higher. And on the 1-hour chart, silver has actually retested that breakout level twice, each time with buyers stepping in to push prices back up. From a purely technical perspective, this looks like a textbook breakout confirmation. The market shook out the weak hands, found support, and is now positioned for the next advance. This technical setup isn't happening in a vacuum, though. It comes at a time when macro conditions are increasingly aligning in silver's favor. Earlier this week, Fed Chair Jerome Powell hinted that quantitative tightening could soon come to an end, citing a cooler labor market and balanced risk outlook. Translation: the next phase may be monetary easing, and historically, few things light a fire under gold and silver prices like the end of tightening cycles. We're already seeing cracks appear in the financial system. Regional bank stocks tumbled this week amid concerns about souring loans, echoing the stress that we saw during the 2023 banking crisis that forced the Fed to expand its balance sheet through the Bank Term Funding Program. If liquidity pressures return, the Fed may have no choice but to pivot back towards balance sheet expansion. In other words, QE, probably by another name. The chart of the Fed's balance sheet tells the story clearly. Each time financial stress spikes, the balance sheet expands. It's hard to imagine this time being any different, except of course that the debt load is far higher now than it was back in 2008, 2020, or 2023. If another wave of liquidity support is required, it will almost certainly translate into more currency debasement and more upside for hard assets like silver. We are also seeing real-world confirmation that silver demand is straining the system. Bloomberg reported this week that the Royal Mint in London is warning of delivery delays due to unprecedented demand for silver. Inventories in London vaults are so low that fresh stock is being flown in from New York to meet orders. At the retail level, bullion dealers in London's Hatton Garden described a perfect storm, with buyers queuing outside of shops and the Royal Mint running its presses at full speed. Silver prices in London are up more than 80% year to date, and even at record highs, investors aren't backing off. That kind of demand during a rally is not speculative froth, it's panic buying from those seeking safety. The same tightness is playing out in the institutional market. Bloomberg also reported that the cost of borrowing silver in London, the 1-month lease rate, has surged to an annualized record of 35%. That's a level not seen even during the Hunt Brothers era of 1980. A move like that means physical metal is incredibly scarce. Much of the available silver is locked away in ETFs and not available for delivery. When you see borrowing costs spike like this, it's a symptom of real stress in the system, not a speculative bubble. All of this points to one thing: the paper market for silver is struggling to keep up with the physical reality. Even with silver above its nominal record high, the gold to silver ratio remains elevated at over 80. Historically, that kind of reading has only occurred in the early stages of major precious metals bull runs. As the cycle matures, silver tends to outperform gold dramatically. The ratio was in the low 30s at the peak of the 2011 bull market. If history rhymes, we may be looking at a long way to go before this bull market actually peaks. While silver itself closed down just over 4% on Friday, the SILJ ETF, which tracks junior silver miners, fell more than 7%. That kind of exaggerated downside is typical of the miners during volatile sessions, but it can also mark opportunity. Miners often act as leveraged plays on the underlying metal, underperforming on pullbacks but outperforming sharply when prices move higher. With silver now confirming its breakout and sentiment resetting, SILJ and other quality mining names may represent some of the best relative value opportunities in the sector. For those following the broader sector, it's worth keeping an eye on how these equities behave as silver begins its next leg higher. One company that stands out right now is today's video sponsor, and I actually think this is the perfect time to highlight this stock, Dolly Varden Silver, ticker DVS, on the New York Stock Exchange. Dolly Varden Silver is one of the purest silver plays in the market today. The company's flagship Kitsault Valley project, located in British Columbia's Golden Triangle, sits in one of the most prolific mining jurisdictions in the world, an area that has seen over $5 billion in mergers and acquisitions since 2018. The company controls more than 100,000 hectares of highly prospective ground, including multiple high-grade past-producing mines such as Dolly Varden, Torbrit, and Porter, Idaho mine. Historically, the original Dolly Varden mine was once considered the richest silver mine in the British Empire, producing over 20 million ounces of silver at 1,100 grams per ton silver. Dolly Varden continues to deliver impressive drill results, including this year's 1,422 gram per ton silver over 21.7 meters, including 10,700 grams per ton of silver over 1 meter at Wolf Vein. With a 55,000 meter drill program completed and results pending, the company is expanding known deposits and testing new targets along strike. Under CEO Sean Kuhn, Dolly Varden has grown from a $20 million to over $500 million market cap since 2020. Major institutional investors, Hecla Mining, Fury Gold Mines, and Fidelity hold positions, along with prominent names like billionaire investors Eric Sprott and Rick Rule. With a recent $30 million raise, Dolly Varden appears well-funded to continue advancing its exploration and development plans. The company's strong balance sheet, high-grade resource base, and capable management team provide a solid foundation for continued progress. I've followed this company for a while, and Dolly Varden has my full endorsement to take a closer look. As always, don't buy a stock just because you hear about it here, but this is one that serious silver investors will want to do their due diligence on. Even after the broader pullback in the metals on Friday, Dolly Varden Silver's share price remains up more than 57% year to date, showing impressive strength over the course of this silver rally. Shares did drop over 8% on Friday, though, and in my view, that move looked more like an overreaction from short-term traders worried that the rally might be over. Personally, I prefer to buy quality assets when they're on sale, and pullbacks like this can offer long-term investors an opportunity to accumulate at better prices. You can learn more by visiting dollyvardensilver.com, and I'll have their corporate presentation linked in the video description below. So, some final thoughts. The past week's pullback looks less like a warning sign and more like a confirmation that silver has successfully broken out of its long-term base. With the Fed pivoting, the banking system flashing early warning signs, and real-world shortages emerging, this is the kind of setup that long-term silver investors dream about. Whether it happens in weeks or months, I believe that the next upleg in this bull market will be powerful. The fundamentals, the technicals, and the psychology all line up. As always, this video, it's for informational purposes. It's not financial advice. Let me know your thoughts in the comments below. Is this retest of silver's breakout a sign that the next upleg is imminent? Thanks for watching, everyone. Stay safe and happy stacking, and I will catch you next time. Smart Silver Stacker, out.